conversations with your clients, right? Are they centered around the negative, the narrative rather, that look, as the Fed starts a fresh cycle of cuts, finally, right, that is going to bring dollar down, and that's going to drive potentially a lot of foreign money into Asia, including EM, and it's going to be a good year.
For EM?
Yes.
Or less for the dollar. Well, first of all, we have a lot of discussion with clients. You know, it's the beginning of the year. We are all out there with the road shows, and this is a very busy time, and there's lots of feedback. Now, in terms of a few elements that you mentioned, first of all, in terms of the dollar, you know, not being able to appreciate as much because we're looking at rate cuts. I would still argue that the dollar is between two forces. You know, of course, the one hand, you have the Fed putting in a very strong pivot that now we're having cuts and the market is pricing quite aggressively. But on the other hand, you have a lot of geopolitical risk. You have a lot of national elections coming up this year. You have two hot wars just right now, and I think it's a medium term, sorry, it's not a medium term, it's a very short term risk as well, the geopolitical situation around the Red Sea right now. These are all concerns that will have dollar looked at as a safe haven again. So these are the two forces that most probably will not kind of completely change the narrative for the US dollar, and because of that story, you know, bring more opportunities into emerging markets. Just to put a bit of a dent on this. But I do not want to take out opportunities from emerging markets because, as I said, it's a very varied, very diverse opportunity here out in Asia, and also in terms of valuations, we have different opportunities, and so there are a lot of interesting opportunities.
I'm glad you mentioned valuations, and India stands out as something off an expensive market, although there was considerable momentum and outperformance last year. Can that continue this year, given we got an interim budget coming up and, as you mentioned, the elections?
Yes. And India is a bit of a sore one because it has all the right elements going for it. You know, all the long and medium term structural drivers are still very much supporting the India investment opportunity, but it's getting so expensive that everybody's waiting for that setback, as I would love to see as well. But, you know, the problem is, do you really have to, you know, can you afford to wait for it, or do you go for specific opportunities when sectors are selling off to go back in? Right now, it seems there may be an opportunity to go back in better levels, which is something we want to do because we very much see India as a play. Can I just quickly add, I think India and maybe also Japan, or most definitely Japan, is also a counterbalance to what the outflows we're seeing out of China at the moment.
Yes.
And I think from a global investor perspective, something that we discuss a lot right now is the way they look at the whole investment universe, emerging markets. Because MSCI EM, you know, in the past, a couple of years ago, was all about China. You had 40% weight in China. So you invest in the MSCI EM and you actually have a China play. That's not the case anymore. You know, the re-rating towards Taiwan, towards India have really helped. And I think that investment opportunity, even you look at the basket, you do not want to be overconfident on specific smaller markets. You can go into MSCI EM and, you know, reap that opportunity.